is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, give me 1 second here, folks, and I'm going to see if I can get this chart up for the... oh, dear, let me see what I'm doing wrong now. Hold on. Let's see if that works. Hold on just a second. Maybe that'll be a little bit better. Okay, all right. That's a good way to start the 4th of July. By the way, this is William Randolph Valentine, also known as Billy Ray. And we are broadcasting from our offices at 100 South Broad Street, Philadelphia, Pennsylvania this morning on the 4th of July. And we're going to take a look at something a little different today, folks. This was a chart that was sent to me by one of our listeners. It's from the Elliott Wave Theorists, and it shows the stock market going back into right after the founding of the country. As you can see here, it's a pretty long-term chart. What we have to be watching here is the fact that this chart goes back to the 1800s, 1830s, during the time of Andrew Jackson. What I'd like to show you here, this is showing you how the positive social move makes things work. But really, it's much more than that, because it really shows you that the news really follows the market. And if you look at this time, two things that were important to remember. The Civil War started, folks, in 1861, and look how the market went up all during the Civil War. I mean, it was, here was news was incredibly bad. We lost 250,000 of our comrades, our citizens of the North and South. I mean, it was the worst war we've ever been in, and yet the market rallied during that time. What I wanted to show here is, can someone tell me what's wrong with this chart? Take a quick look at it, and if you'll just tell me, this is like a little test this morning because we're on a holiday atmosphere today. So why don't we take a look at this? Can someone tell me what is wrong with this chart? Just take a quick look at it, and if you can tell me, I'd certainly like to hear what you have to say. Okay, time's up. No one got it. Basically, it shows the Dow Jones Industrial Average as reported by Bloomberg. Folks, the Dow Jones Company didn't start till 1882. The Dow Jones Industrials didn't start till 1896. I remember I was there that day. So the thing that we got to remember here, they're getting this data from somebody else, and it's reported as wrong. Now, the chart, I believe, is correct. Now, 20Min's got the best data that I've seen on this stuff, and we go back to 1875. Which is just to the the other side of this. But if we just take a look at patterns and stuff, and I believe, see, the problem that you had with the back in those days is the newspapers. We didn't have the internet back then. We didn't have television. We barely had water. But now, back in those days, the stock exchange, basically it was the New York Times or the Philadelphia Inquirer. One of those would put a little tiny data thing of what the stocks were doing. Once in a while they would put a graph in, but that was even very, very rare. None of that stuff really started happening until the late 1870s, early 1880s. That was more than 10 years after the Civil War. And then it started to get, bigger and bigger as the Industrial Revolution came on. So these prices were hard to get. Now, I don't know if this chart is correct or not, but I think it's probably pretty close, given, the history of our country and what has, happened over a long period of time. Now, what I did, just to give you an idea, to show you how patterns have not changed over the years, all I've done is taken this same pattern that we looked at, this from the Elliott wave theorist, and all I did was put in the patterns that we look at. You'll notice the 3 drive to a bottom pattern coming into the 1830, the crash of 1838. That was during the time of Andrew Jackson, and then the bottom came in 1837. You notice it made a Gartley pattern, ABCD, up at the 78% retracement in 1859. And 1849, that was the California gold rush at Sutter's Mill, and then we came down into the 54 level, and then we started, a big bull market that went all the way through the Civil War, and then after the Civil War there was a sell-off, and then of course the market has continued to rally. But this is what it says here is the Dow Jones Industrial Average monthly closes data from Bloomberg. That is not correct because the Dow Jones didn't start reporting. There weren't any Dow Jones stocks until 1896, and the Dow Jones family didn't start the company until 1882. So that's what I'm looking. I don't understand what that means about a bad chart posting. Is the chart posting poorly or not posting at all? I don't. I'll tell you, all my frustrations in this business come from technical difficulties, folks. Believe me, it's really no chart. Oh boy. Okay, let's try it again here. Give it one more chance, and we'll see if we can get this thing fixed up the right way. Oh, just a minute. I think I know what the problem is. I've got the no, I think I know what the problem is. The problem is I've got the little switcher or switcheroo thing off to the side a little bit. This should work. Let's just try it. That should work. Let's see if I did it right. Let's see if I'm a real techie or not. And we'll go from there. 10-4, rubber duck. We're there. Okay, let's just keep in mind that all I was trying to do was to show you that this is what happens when you see some things like that, and they're just not correct. I mean, the chart may be correct, but it may be from Bloomberg, but it's not the Dow Jones Industrial Average because we didn't have Dow Jones stocks until 1896. So keep that in mind. It's most probably the stock market, but the data is questionable a little bit. I'm sure it's around somewhere, but we didn't actually go any farther back than 1875, and we've looked at things that go back to the Babylonians and the Sumerians on charts that they did, but nothing ever changes. These things are basically, if prices go up, there's more buyers. If prices go down, there's no sellers. So okay, now someone's not getting it. I don't understand. Well, Mr. Colorado, Jim, I wish I could get it in there for you again. Let me try posting it one more time just to see if that'll help, and we'll see if we can get it. So this is pretty much a holiday atmosphere. We close at 1:15 Eastern Time today. That's 10:15 Tucson time, where it's going to be about 107 today. Lovely, balmy, dry heat. And but we have a weather market going on in the grain markets. I ought to bring this up. We talked about this in the newsletter, of course, that there was a really strong possibility of seeing that. And we've had a big move. We'll just put this up so you folks can, take a quick look at it here. That's not the way I do it. Hold on just a second here. Take a little break here, and we'll be right back. I'll post this soybean chart so you can see it.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to talk a little bit about the gold market here. As you can see, it's been, breaking badly as of Sunday night. And, as we mentioned last week, it had a lot of ABCD patterns coming through at around the 1222 level. And we're only a few bucks away from that. And, of course, we're in a holiday atmosphere, which means the amount of volume that we're going to see here is going to be relatively muted, I believe. But right now, it looks like we are heading down towards that area. Once it breaks that 78% level, it doesn't give it a whole lot of, room to rally. So we'll see. Now, silver has been, under a great deal of pressure also. Here's where we were. Well, that was last night, and we still had let's just get the updated one if we can. All right, where are you, updated one? Give me a break here now. Well, I don't seem to see it, so I'm not. Yeah, here it is. Here we go. This was happening last night when gold was breaking. I just wanted to show you what happened and how they took turns rolling over. Because if we look at silver last night, it actually opened relatively unchanged and didn't do very much, and it stayed there for well over 2 hours. And then when gold started to break, which was around 12 o'clock Eastern time, midnight. Then the silver really started to accelerate, and it's taken out all of those lows and is now, heading down, for a much lower price. If we look at this chart that we posted last week in here, just to give you an idea of what was going on, you can see the ABCD structure that we have in gold here that comes in at the right around the 1219, 1218 level. And remember, the old stops down here from way back in May are at the 1214 level. So we could easily take that out because we're in a long consolidation range between the middle of April to where we are right now. And that's going to be it. Now, we're going to have Norm Winsky as our guest on Thursday. And then we will have, that'll be July the 6th. And I believe on Wednesday or Friday, we're going to have Bill Meridian of Cycles Research out of Vienna, Austria, as our guest at that time. Now, I wanted to talk just a little bit about the comment that Janet Yellen made on, I believe it was Wednesday, where she actually said that there was not going to not likely be another financial crisis in our lifetime. Folks, believe me, if you ever heard of a guy named John Maynard Keynes, you know, the Keynesian economics guy, in 1927 he came out with the exact same words. I mean, that was 1927. That was 2 years before the top of the biggest stock market bubble one of the biggest bubbles of all time. And so just because people say these things don't mean they're going to happen. Let me show you another one, folks. If you want to go back into the history books, let's just take a look here at our good friend Helicopter Ben. And let's just take a look what he said back in June of 2008. The top was October 2008. So all I'm telling you is that these folks have an opinion of something and they say it. That doesn't mean that it's right. I have a book on my desk that I've talked to you about before. It's called The Experts Speak by a man named Christopher Cerf, C-E-R-F. And it's 400 pages of thousands of quotes from people that are professionals and experts in their field that are totally wrong. And Einstein's in there, probably half a dozen times. And it's really amazing. Here's one from the Decca Records from 1964, where they turned down this group, 1962, since it turned down the group called the Beatles. Can you believe that? I mean, and the guy probably was promoted. So just because you read something in the news, don't take it as gospel. That's 100% for sure. But anyway, that book has got so many, and I have to tell you, my all-time favorite quote in that book comes from Wendell Willkie. Wendell Willkie was he was in the 1940s, 1941. He was a vice presidential candidate, and he was at a breakfast meeting in Washington, D.C. on December the 7th, 1941, where he stated, "We will not go to war with Japan in 48 hours, 48 weeks, or 48 years." And he was right, because it was 8 hours later that the war started. That's when they bombed Pearl Harbor because of the time difference. But anyway, just because people say things, they certainly, that doesn't make them true. But if you want to read something about how some really smart people made some really silly comments, that book is really something to look at. It's called The Experts Speak by Christopher Cerf, but it's got some really smart people in there, going back to antiquity too. So it's really amazing. It's nothing's ever changes with these things. So we've got gold and silver breaking down. The one trade that I really wanted today, it doesn't look like we're going to get it because we've had a pretty good rally here this morning. We might come down one more time, but I'd certainly look at that. We've been very bearish in bonds, for several weeks now, ever since we had that false breakout at 157. We're now down 4 handles. We're right at the 61% retracement, comes in at 153.03 on the little puppy. So keep an eye on that, because we should get a rally, and we really need to watch this rally, because this is one that is going to have legs, in my opinion. If we take a look at what's happening with the German Bund, and this is the one that really started our market, is going higher interest rates too. And I'll post this here so you can take a look at it. This is going back, of course, 5 or 6 days, but you can see the high that we had up there, where we had the ABCD pattern completing in the Bund. That was equivalent when we were taking out the 157 level in the bonds. Of course, you remember the notes were lagging very badly. They couldn't even take out the highs of the last 3 days when it looked like we were breaking out in bonds, and that's why we suggested that might be a false breakout, because the notes are 5 times the volume and open interest of the bond. So that's the real market. That's where your interest rates and credit card stuff comes from. So that's why I believe, that's important. So, but we are in a bear market in these bonds, and it's really starting, with a lot of gusto. So we need to watch the 382 retracement on this, which would take us up to about the 154 and change level, I believe. So we want to watch it real closely over these next few days. One of the questions someone's asking me now is whether that's going to be an important bottom in the gold, and I have no way of telling that, folks. All I can tell you is that there's some targets down there that should give it some support, but that doesn't mean that it's actually going to hold that support, because they can go through there very, very quickly and not cause any ripples in the market at all. So my guess is that we're looking at markets that at least the metals markets look lower, with the exception of copper. That one's actually, holding up okay. I listened to John Logan this morning on the show. I think it was recording, but he talked about copper having some stiff resistance up around the 272 to 275 per pound. Very, very possible. 877-927-6648. We'll be back and talk about the stock market.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're having a little discussion here in the den this morning about the weather market that we've got going here in wheat, corn, and beans. Everybody thinks the weather that we're having here in Arizona is going to be shifting up to the Midwest, and it certainly could. But believe me, these weather markets can change on a dime and leave 3 cents change, because they have they can be very, very volatile. Actually, the soybeans tonight are actually, they're trading up quite a bit. They're up over 20 cents. But if it were really bullish, it would literally, you would go limit up, I would believe, the 30-cent limit. It reminds me of a situation that I had many years ago, 1988. I had my Astro Cycles newsletter, and I had a hotline. Larry Williams gave me his recorded hotline, and so I would give a updated recording right before the close, and then I'd give one early in the morning. And on one day, on a Friday on the close, we happened to be long some beans. This was 1988, and I mentioned on the recording, I said, if the soybeans close limit up today, there's a real strong probability they might not trade for a few days, because the chart would look so bullish that it could be in a really explosive move. Well, the beans rallied right on the close, about the last 15, 20 minutes, and closed limit up. And the next day, they opened limit up. That was on Monday, Tuesday, Wednesday, Thursday. They opened 4 days limit. They went $1.50 a bushel. They expanded the limits. Then the market topped on the following Monday. That was the top for the year. But I had a farmer in Iowa that took that as a buy signal to add more. And so he started to buy right on the close, right before they went limit up. And he was able to get filled. And he sent me a case of champagne. And I had no idea why, because that was not a recommendation. I was just making a comment. And I told him, I said, Phil, I said, you don't have to do anything like that. He said, oh, man, he said, that's the most fun I've ever had as a farmer, was being in a move like that. And he said, I was long the futures and long the cash. Anyway, those were back in the old days. But the limits now, they expand them. And believe me, we don't see limits very often, because these markets have expanded so much that they can change it at will. We saw some of it, if you remember, on New Year's. Well, I guess it was a New Year's, on November the 8th, when the market was down 900 points in the Dow. It went limit down that night, as did the S&P 500, and of course it started rallying. And by the time we had the opening the next day, we were already on our way to much higher prices. So you have to sort of keep in tune with what's going on with some of these markets, because these weather markets can be, oh my goodness, they can be extremely volatile. If you remember last year, the corn market, it topped the weekend over the July 4th weekend. That's when the corn topped and broke almost about $1.50 a bushel, to the downside. So it's not an easy thing to trade, and you have to follow it just about minute by minute. And one of the gentlemen we were going to have on last week, Cy Monley, he's on vacation up in Canada this weekend, fishing, next week or so fishing. And I was chatting with him this morning, and he was telling me about the weather reports that they're seeing. He said that one of his one report was saying one thing, and another report was saying another thing. So even when you get the report, sometimes you have to decide which one that you want to follow. But there's no question that we're in some type of a dramatic weather market. Not as dramatic as other years, because if it were dramatic as some other years, we would be lock limit, and they would be up 30 cents, and then they would make it 45 cents on the next day, and then 60 cents on the next day, until they started to trade freely. Back in the days of the Russian grain robbery, I believe beans didn't trade for 8 or 9 days. They went limit up 8 or 9 days. That's when we had a 20 or 30 cent limit. Maybe Mr. Z could help me remember that. But as I recall, in during 72 and 73, we had those moves. That's when July beans hit $12.90 that year. That was a level they would never get above. We would never see beans in the teens, and now we've been trading in the teens for many times. But that's a little different story. But anyway, you have to check on what these limits are. If you have a regular brokerage account, they can do it. So a place like Interactive Brokers, they're not going to be able to help you too much on that. You're going to have to dig it out yourself. Or the easiest way to do it is to go to www.cme.com, and that would give you a pretty good idea of what the limits are going to be, because they do post that into the website there. Okay, now we want to talk a little bit the stock market. I've posted the chart for the E-mini S&P. As you can see, we have a price objective that we're looking for to come into around July the 8th, which is a Bradley date, of course. And that price is, quite a bit lower than where we are right now. There should be some pretty strong resistance around the 2440 level in the E-mini S&P. But if we do make a new high, and it's certainly possible, all bets are off, and, we could make, another high. But we're coming into some really serious Bradley stuff, folks. I want to show it to you two ways to just get an idea of what we're looking at here. The first one we're going to look at is the regular Bradley model. And that shows that, we had a high on June 19th, and we're looking for a low on July 18th. And I say but because we're only, 4 days away from this. If we take a look at an inverted Bradley model, you're going to see that we're going to have to wait until July 8th to determine whether we're going to see this. What's interesting about this inverted model is that it turns down until August the 14th. And if you remember, we had both Shane Smolian on and also Bill Meridian on a couple weeks ago, talking about the importance of that August 14th eclipse that we have during that time. So this could be a very interesting spot, to take a look at this. I've done a lot of research over these last few days with a little extra time on my hands, going back and historically looking at some of these. And we are in a zone where we could certainly have some fireworks, mainly because it's the year 7. And as W.D. Gann mentioned, that is the death year. In other words, the end of the cycle. So whether it is actually a death year or not, we don't really know or not. But we'll keep an eye on see what's going on. We have crude oil has just made a higher high than we had on Friday. Now that should be getting close to the very first resistance points up here at the 46.50 level. In crude oil, there should be some pretty good resistance between 46.50 and 47. That's going to be a 50% retracement back. But, the bottom came in really nicely at 43. All the cycles lined up perfectly. And that one, seems to be working, as we expected. The only one that's not working as I wanted to today is the Treasury Bonds, because I really wanted to see the Treasury Bonds get down to the 93.03, and we're trading at 93.25 right now. So I'd really like to see that happen. Whether that's going to be the case or not, we'll have to wait and see. But that's neither here nor there. We'll take a little break here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back, and I wanted to post the chart of the euro on a daily chart, going back over the past year and a half. And as you can see, we have a downtrending line that stopped exactly at the 78% retracement at 114.35. I believe the high was 113.45 on Friday. We're now trading at 113.55, I believe. But the key to remember here is this is still in a rally in a bear market, of course. But what we need to do is we need to look at the euro on a little bit shorter time scale right now for trading purposes. And remember, we have foreign exchanges going to be traded tomorrow on the 4th of July. And there will be limited trading in some countries, of course, but most of the countries will be trading as normal because, believe it or not, they do not celebrate the 4th of July. But let's just take a look at this euro chart to see where we are. If you went back to back on the 27th and 28th of June, you'll notice that we had that 100 pip correction that stopped right at the old highs where we broke out of at the 1290 level. That's being a real interesting. There will be no. By the way, there'll be no TFNN tomorrow, folks. It's a holiday here in the United States, so TFNN will be taking a holiday. So that's neither here nor there. But let's just get back to this euro chart here to remind you what we're looking at. You'll notice we had that 100 pip break that was in the things, and if you'll notice now, we're almost at 100 pips now. We're getting close to that 113.50 level. That's a 61% retracement, folks, of that low on the 28th of June. That's also an equal move down. So if the euro is going to have support, it's going to be here at this 113.50 and change. That's what it looks like, from a charting standpoint. And this is a rally in a bear market. But remember, these rallies can extend, a long time. We had a bottom down here at 104 in the euro a few weeks ago, about 6 or 7 weeks ago, which was a really nice 3-drive pattern, and we've rallied 10 handles since that point. So these rallies could really be pretty dramatic. And this is what we're seeing now. This whole thing, to me, is based on if we get below the 1295 level in the euro, that's that old high breakout. If we get below that, that means that 78.6% retracement is now finished, and we should start another leg down that's going to take us below par. And that'll be below 104. We're looking at a price eventually, we think, around 98 on the longer term, weekly charts that we've looked at, over and over again. But the euro is, very, very important level at that 12. Let's try it again. 1290 on the downside, 1250, 1350 for a short-term 61% retracement, and then the long-term 78% downtrend line comes in at 114.45, and we closed at 114.27. We're now trading at 113.62. So it's down about 80 pips from the high, which is pretty much spot on to what the harmonic number is in the euro. It usually runs between 70 and 80 pips. So we want to watch this one, really, really closely, as near as we can tell. Now, I wanted to just give you some parameters here on the E-mini S&P as far as what we would be looking at for support and resistance today. This is nothing more than a half-hour chart going over the last, last week or so, and you can see here that we had a 61% retracement here at the 2432, and 2436 is the 78% retracement of the move. I would think those would be the areas where you would have the most resistance coming in. Folks, the problem that I'm having here is the fact that when you look at this long-term picture in the Dow Jones Industrial Average and how we're having this divergence in the NASDAQ being so weak, I mean, the NASDAQ can't, even though we're up today, it can't even make a 382 retracement of this move. This is not a good sign. But if we look at the Dow Jones on a long-term monthly chart, I mean, we hit some, and this is really, this is my own chart, but the idea for it came from our good friend Kevin Murphy out of Nashville, Tennessee, because he does so much of the Bill Ehrman work. And you'll notice here that on the high of June the 19th, which was a Bradley date, the Dow Jones hit the exact, I mean, folks, within I think it was 5 Dow points, something trading at 21,340, it was within 5 points, it went 5 points higher than the 1.618 expansion of the whole move going back to 1987. I mean, this is something's got to be big happening here. That's my opinion. I don't know. I did a lot of work. I think it's going to be correct, but you never know. It's just like the things in the experts speak. Sometimes they work, sometimes they don't. That's the bottom line of what you're watching. Now let's switch over to the Treasury bonds here for a second. I've been asked to take a look here about the TPT, which is the ETF for being long bonds. As you can see here, we came down to a 61% retracement, and the market has, rallied up a little bit. And, that's, basically what you're looking at here. You had the ABCD structures, on the way down. We're having a little bit of a rally there. But, that's, very, very small rally as near as I can tell. But that's just one of the things that we look at today. I wanted to share with you one other one because we might get back here today. You got to pay close attention because we didn't get much of a rally yet. We got up to 153.23 in the Treasury bonds, the September bonds. But if we take a look at that Treasury bond chart on a 60-minute chart going over the last 3 or 4 days, you can see we have a really nice ABCD butterfly pattern coming in at the 153.03. which happens to be the 61% retracement on the long-term daily. So that's multiple numbers coming in there at that 153. Now, we've been to 153.08, and then we rallied up to 153.30 this morning, which was, another 61% retracement of the rally high from the 29th. Now we're backing off a little bit, but this market is so oversold that is due for a rally. That's the main thing that you want to remember, that this is a bear market, but it is a very, very oversold bear market for being down 5 dramatic days. That's really the key here, is the fact that they were very dramatic, and it was started by the German Bund over in across the pond in Germany. So this is just transforming what we've got going on here. What's amazing to me is the fact that the euro could go up with our interest rates going higher. That is contra economic thinking, because if interest rates are high in one country, people will move their money into that country to gain an advantage. And believe me, it's a substantial advantage, because you look at countries like Italy and Spain with very poor ratings, and yet they are yielding less than our 30-year Treasury bonds. Something's not right in this equation, boys and girls. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to update this chart for the Treasury bonds this morning because we had a pretty good rally. It got up to the situation where we've had a 61% retracement of the high that we made back on the last Friday, the 30th. And now what we're waiting for is we can get down one more time down to that 153.03 level. And that's going to be a 61% retracement of the whole move down. That's taken, 7 trading days. And it's also a 1.618 expansion. On the trade, if you decide to do something like that, we don't know what's going to work or not. So you've got to be able to place a stop. And usually 16 pips or $500 is enough to use to see if you're going to be right or not. Remember, bonds swing, they go up and down quite a bit every day. They moved over $1,200 already this morning on a holiday type day. And so they can really move quickly. So you've got to protect yourself if you're wrong. And remember, from that book, The Experts Speak, everybody's wrong. We all have an opinion, and they usually smell. So keep in mind that you're the one that has to make the decision on whether you want to be involved in the market at all. Remember the old market adage, it's much better to be out of a market wishing you were in than in a market wishing you were out. How many people that bought bonds at 157 that are still holding them that make you, have second thoughts, about that. So that's the main thing. Now, we did get down to the 1224 level in the gold. That price chart that we posted looks like it's going to hit around 1218, 1220. Remember, 1214 is the low of last May. And so we could easily take that out, and we have to look at a longer-term time frame to see, what the next support is. But right now, these metals, with the exception of copper, look, very, very weak. They've broken all support. We've been saying that here for the past several days. But let's have a wonderful 4th of July, folks, and try to do something good for a veteran if you get a chance. And may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.